Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 for Wednesday, May 27th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. Today we were up 1.48% on the S&P 500 and closed at 3036.13. The first chart that we're going to look at is a 3-day, 3-minute chart of the S&P 500. So each candlestick represents 3 minutes of trading. And what we can see here is today's market action where we gapped up at the open and then started to sell off. And just before 11 o'clock started a rally again. So it was starting to look like a repeat of yesterday, where of course we gapped up at the open, made the highs of the day yesterday at the open, and then closed at the lows of the session. And so it was starting to look like a repeat of yesterday. But then just before 11 o'clock, the market started to act better. And from there, as we can see, we trended higher and closed at the highs of the session, closing again at 3036.13. And we finally closed above 3,000 and above the 200-day moving average for the first time since early in March. And this was the highest close on the S&P 500 since March 4th. And then when we look at the sectors within the S&P 500, we can see that once again, the financial sector was the best performing sector for the day of 4.34%, followed once again by the industrial sector up 3.34% for today. And on a weekly basis, what we can see is these two sectors really have led the way along with real estate. The financial sector on a weekly basis is up 9.02%. Industrials are up 7.84%, and the real estate sector is up 7.09% for the week. And then when we look at technology, technology is actually negative a little over 0.5% for the week, down 57 basis points, and the healthcare sector is positive 32 basis points on a weekly basis. And these two sectors, along with communication services, which is up slightly, a little less than 1% for the week, up 86 basis points. But these three sectors have been the best performing sectors up to this point. But we're starting to see some sector rotation here over the last week. So if this market is going to continue to go higher from here, we will want to see the breadth continue to widen out. And keep in mind that 7 out of 11 sectors in the S&P 500 are still trading below their 200-day moving average. So we will want to see follow through on today's market action. We're going to want to see the market continue to close above 3,000 and continue to close above the 200-day moving average. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Thank you for watching this video. Before you leave, don't forget to subscribe to this channel. Please give me a thumbs up on this video and check out some of my other videos. I have a lot of great educational videos on this channel. And if you are a financial advisor or an individual investor that manages any of your own money, including in your 401k, 403b, your IRAs, or of course your trading account, I would encourage you to take a serious look at Simple Market Signals, which is my personal risk management model that I have now made available to the public. For those of you who would like to learn more about how Simple Market Signals can help you in both up and down markets, here's some additional information. As part of the Simple Market Signals model, there are 3 powerful indicators. There's the Simple Market Signals proprietary risk level signal, There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market, and a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in this Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy.